This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, November 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn up a penny and a quarter at 4.31. January soybeans were up 5.5 at 11.41 3/4. And December Chicago wheat was up 6 at 5.42 3/4. We had a couple of export sales announcements here this morning. 132,000 metric tons of white wheat to China for 25-26. Also announced 462,000 metric tons of soybeans, also to China for 25-26. We did get a weekly export sales report. This is as of the week ending 10/2. Corn sales, 2,259,700. That would have been towards the upper end of what they were estimating at the time. Soybeans, right in line with estimates, 919,400. Good solid wheat sales, 887,900. Upper end of the range was looking for a number closer to 600. On the meal side, also solid, 328,300. And there were net cancellations in bean oil, minus 11,800. That was below the estimate, lower end of the estimates there. Good morning, guys. Hope everybody's doing well. We had some interesting news out yesterday. I think we'll touch on it here briefly. There was some rhetoric and rumors surrounding biofuels and credits, and certainly caused a pretty sharp break in bean oil and kind of follow through in the soybean complex as well. Also, Secretary Rollins came out announcing that there's likely going to be an announcement kind of the first week of December relative to farm aid. This is on the heels of her deputy secretary talking about them taking into account kind of some newer market developments. So that should be interesting to see there. And lastly, tomorrow, these options are going to go off. So should be a pretty interesting next 2 days to see where we settle. With that, Justin, maybe a few thoughts and comments. I know it was kind of disheartening to see those rumors relative to biofuels yesterday, and they are rumors and they're just kind of pointing, not pointing us in any certain direction, but with the EPA's public comment period coming to a close here shortly, it's going to be interesting to see where they fall. So I guess, what are your thoughts as we start the day?
Well, first, I'd like to start off by talking about wheat, and a shout out to Jonathan. So here we go. We got some good wheat news.
Our guy.
Good export sales on October 2nd. So who knows what's happened since then? And we got some flash sales today. So Jonathan, things are looking up for wheat. So
we're back.
So I like that. Like to see that. There you go. As far as, their stuff, this is why, I haven't touched soybean oil for 6 months. It's untradeable. It's headline to headline. So much is hinging on policy. The day before you have, super friendly guidance from the EPA on, forward guidance. So, soybean oil is up sharply. Then yesterday, a story about, the White House may kick the can down the road by a year or two on the, half credit for imported feedstocks. So huge difference on if that happens or not. And then, sources familiar with, the subject, there's no comment from the White House. So Dustin brought this up, and I do think it's true. The administration likes to throw out teasers to see how markets react. That seems to be the case with a lot of these things, and then can kind of pivot. So like I said, in my opinion, untradeable, and that means oil share, soybean oil, meal, they're so interrelated, and the moves are so big and so violent that you feel like if you're not on the inside of that next news flash, you're just there to get picked off. So that's my take on it. Obviously, it's got, you saw a monster NOPA crush number come out. That's all the tens or hundreds of billions that have been put into growing the crush sector. So, and I've talked about this a lot on the show. I think that's the path forward. These trade deals with China are a great Band-Aid to get us to keep doubling down on domestic demand, in my opinion. So to go the other way, I think would be a huge mistake, because these are just temporary things with China, in my opinion. At the end of the day, there's the total bean demand, supply, and like we talked about, it's going to move. The cheapest provider of those things is going to get the business. So even if China artificially buys our stuff, it's making it cheaper in Brazil. There are other needs they can buy for cheaper. The rest of the world can go there. So, yeah, I think like I said, I think it's super important that doesn't happen, and it makes no sense to bring in imported used cooking oil and other feedstocks like that when we're the ones investing all the money in the programs to support renewable diesel and those kinds of things.
That's a good point. How about expiration? You made the comment before we came on. Pretty interesting to see where we settle the next couple sessions here.
Yeah, I mean, so far, Ben's numbers, call it 430 to 440. We've traded both ends of those big strikes. We seem to be supported really good at 430. We'll see if that holds the next couple of days. So I kind of think that will continue to happen. We're still above a lot of these moving averages in soybeans. So, I mean, we could break down to call it 11 to 1110 and still be just touching the first of the moving averages. So I think that's not surprising to see some pretty decent setbacks just to kind of clean it up a little bit. And still in a really good uptrend, still have really good prices. I do think a lot of people yesterday started really looking at, wow, we really have moved a lot. I do think you had a lot of farmer activity last couple of days, which is what should happen at 15, 16, 18-month highs. So not surprising, right? So far I've had really good demand on big setbacks. Hopefully that continues and go from there.
Ben, what's on your mind this morning?
Basis in the Eastern Corn Belt, one of the quickest rises from fall till now that I've seen since I've been watching it. We're seeing 30 to 35 over type values trading, and not necessarily in Northwest Indiana, which typically is a little bit lighter than that. Southwest Ohio, Indiana, there's definitely, a lot of things at work here. Grower probably having some diamond hands holding on to it. Processors trying to get their fill before the holidays. And that, to me, that's encouraging. 2 plus 2 does not always equal 4 in our industry. But I think there's a little tilt there to say we probably didn't have a record in Indiana, and Ohio's probably not 194. Overall in the markets, I think that, like Justin said with soybeans, you can have big setbacks and still have a strong market. And he probably didn't say the strong market, because I definitely lean a little more friendly soybeans. I think I don't want to put words in his mouth. I think the next big thing we have here is first notice day next week. You don't want to sound like a broken record, but this is where the rubber hits the road. There's certainly a large amount of shorts, I'm sure, that are building, waiting for this expected capitulation on basis contracts. I kind of think that you might see more growers roll it as the spreads come into 11 and the orders 11 and a half, and kick the can down the road for the January report at this point. So we'll see. Certainly encouraging the export numbers we're seeing. Another flash sale for soybeans. Backdated sales feel good. That's already been traded, but it starts to build a little bit more of a compelling story. But first notice day for corn next week, I think is going to I think we're going to have some volatility back in these markets from, call it Tuesday, Wednesday into the following week.
I did want to add something to that real quick. Yesterday, Informa, which is now S&P, came out with corn and, initial corn and bean acreage estimates for next year, roughly 3.5 to 4 million acre switch back to soybeans from corn. And I think that aligns with, kind of what we're thinking. When you look at no 26 beans, or, call it 70, 75 cents above last year's crop insurance price, corn's 5 cents below right now. And we've had such a big corn acreage number that there should be a natural rotation back anyway. I would argue that that's kind of a starting point, and with the aim of it going higher back into a kind of a more normal balance. So I just want to throw out there, Dustin did a really good write-up in our letter with some strategies, kind of how to maybe play this in conjunction with crop insurance, farm bill, potential MFP. I think there's some strategic ways to look at that. So make sure you did read the letter, because I think there's some ways to really start thinking about this without having to, just get locked in. So just to get more strategy here.
Yeah, that's a good point, Justin. And I guess along the lines of those acreage numbers from S&P, it was interesting enough to see too, they got wheat dropping like 3% as well. And I haven't been looking too much at cotton and stuff like that, but like, where are they going? So I know we're going back to beans. We got 4% rise in bean acres projected, right? You're losing almost 4% in the corn side. The wheat side's going down. I mean, are you getting some cotton acres? What are you thinking?
Yeah, I haven't looked at the entire breakdown. I would think things like sorghum, think like dryland corn, things that, wheat's been in the dumps. So I would think all sorts of other things would add to that. Personally, I mean, that wheat's just been, like Jonathan knows, been dogged. So maybe its job's not to lose that many acres, right? So, and that's been the trend for 100 years. Let's be honest. It's been losing wheat acres. You might get a bump here or there, but the trend has definitely been less wheat acres over time, in lieu of other crops. One of the biggest problems we have is, you look at just kind of, philosophically here, but there's only so many crops we can grow here, and so to diversify away from, corn and soybeans, because South America is the cheapest, producer, just been really challenging. If you could really ramp up the biodiesel industry and, grow more canola up north, for example, or even down south, they grow, full season canola, but it's just really hard to find alternatives, and wheat hasn't been a good one either. So it's just tough to do so. I mean, switch to organic has been big, at least with our customer base, doing more specialty crops, things like that. But that's obviously takes years and dollars and time, all that kind of stuff.
Very good. Dustin, you feel good enough to add anything, or you got anything to add this morning before we move on?
Yeah, just, we talked about this big bean rally. I think we've been kind of more supportive of beans and corn all year, especially after that August report showed the big acreage switch to corn rather than beans. And if you think about, like your balance against government policy, is just thinking that in mind has been one of the better ways to hedge this year. Things look most bearish. A lot of guys didn't really need to probably sell as much because they were already in what was perceived to be a large PLC or ARC County payment, because you're going to get the higher of the two. And flash forward to 2026, you can't, base acres are base acres. A lot of the people we deal with in the central Midwest are outsized large base acre corn. They don't have as many bean base acres. This is the strongest farm bill that I've ever seen in my career, right, for price support. So you think about where your risk is. If you're a more modern rotation where you've switched to a 50-50 corn and bean rotation, you're a central Midwestern grower, and 80-90% of your base acres are corn, your real risk is probably soybeans, like that. And we're 70 some cents higher than we were last spring for the 2025 spring guarantee price. Corn's the same price, right? We have all the acres pointing back toward beans. So I think even though beans have made more sense, that's why they've gone up. That's probably your bigger risk if you're definitely going to stick to rotation next year. So just keeping those things, measuring those things, keeping those things in mind are important. Last thing before I lose my voice here, we have 108,000 in the money corn calls, and 50. What I look up for
58,000.
58,000 for the puts. 57,000. So the average corn call is at 417. Your average put is 448. These are in the money average strikes. So do the long option holders, are those retail? Do they want to be long corn going into Monday? And that's the question, because if that's the case, then you naturally think that market makers going to stay neutral. If a bigger portion of those long calls are going to exit before Friday, that would be the weakness. First notice day calls should be starting right now. Most people have to roll or get out by Wednesday of next week to avoid delivery. That's the short side trade, right? Like that's where people need to either sell or roll for most retail people. So just my personal opinion, those two things are kind of just a negative tilt for corn, just my speculative opinion.
Very good. Rylan, real quick here. I know all eyes are going to be on cattle on feed tomorrow, 2:00. It'll be the first one we've seen in a while. So, cattle market's been weak. Hogs kind of caught a little bit of a bid yesterday. So what are your thoughts as we start the day?
Yeah, and I mean, I think there's some kind of hopeful optimism with cattle on feed report, but damage is kind of done this week. It looked like cash started picking up yesterday at 222 to 224 in the south, so generally about $4 lower and 345 in the north, so 5 to 6 lower. So you baked a lot of this into the market. You still got the big discount here on the board here. Maybe we want to try to hold. I mean, December futures fell below the 200-day moving average and did bounce right back. So I do think there's some natural support down there in general. So we'll see. I mean, obviously, like with the placement numbers, 92%. I mean, it's hard to not have a little bit of a friendly bias going into this report in general, just from a supply standpoint. But obviously, the headline trade has just provided too big of a risk, I think, at this point. So, there really just isn't any good news per se, but maybe that starts to turn around here on Friday with however the report kind of shapes up. Also, you got a little bit of macro situation. I mean, obviously we got a decent jobs report, stock market's ripping this morning. Maybe we'll see a little bit more confidence just from a demand sentiment alone. But yeah, overall, it just seems like cash market just really has not found its bottom yet. I mean, we did get commitment of trader data. Obviously, it's from as of September 30th. So we're starting to get this delayed. And, we talked about this yesterday. It's just silly why we didn't just dump all this data out, considering you look at the numbers and commitment of traders showed managed money about 146,000 longs and hogs as of September 30th, which was the top of the market and getting longer at that point. And then cattle, managed money still long 116,000. They just kind of started, or not just started, but had been winding down their long. So you just look at the board and you realize that there's probably a lot of that had come out of this these markets here. So curious to see when it finally catches up. But overall, on the hog side of things, definitely got a little bit of a short covering bounce yesterday. I mean, it's good to see some life there. Cash market still weak. It's 74.61, so you're down about 95 cents yesterday. Belly's down another $8. So there still isn't any good news right now. Weights jumped last week, so it just feels like producers are not current right now. It just feels like the supply sentiment right now is still pretty negative. It just feels like we're swimming in pork and we don't really know what to do with it. So take with that what you will.
Very good. I appreciate the update there, Rye. Just came into the open. We get December corn up 3/4 now at 430.5. January beans are up 4 at 1140.25. And December Chicago wheat's up 3/4 at 537 3/4 is the last. Tomorrow's Friday. We'll have Fun Fact Friday. Be sure to tune in. You never know what Bry's going to cook up for us. So be sure to tune in tomorrow morning to hear that. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. And it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing it live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at AgYield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.